Good morning and welcome to this Money Controls live stream. You're watching opening bell with me, Lovisha Darad. Well, we are at the penultimate trading day, and so far this week, Nifty is up by about 1%. But definitely the largest bull support that came in yesterday. Now, whether or not we can extend this rally is something that we need to watch out for, because it is quite a busy Thursday. Plenty of news to digest, be it from the earnings reaction or the trade deal news on the global front. But yes, for now, the GIFT Nifty is indicating a positive start for today. Even the pre-open rates, in just a bit, we'll look at the pre-open rates because right now the rates have been settling. But yes, the pre-open rates are also suggesting a good start for the Indian markets today. But yes, it is the weekly Nifty expiry, so some of the volatile swings cannot be ruled out in today's trading session. But yes, coming to how the global markets stack up, US markets yesterday was quite strong. We did see both the indices, S&P 500 and the NASDAQ, notch record highs as some of the quarterly results impressed the street. We did see that the Alphabet impressed investor with its Q2 revenue beat. But on the other hand, on the contrary, Tesla disappointed after its decline in revenue in the second quarter. And even the Tesla shares dropped over 4% too. But yes, even the Asian markets, the strong Wall Street rub-off that was visible in the Asian markets today as well in this morning. We saw Japanese broad-based index topics which continued to do well and record highs. That's where the topics index was, because the traders digested more news that came in from the trade deal with the US as well. But yes, coming back home, no sign of deal yet with the US. But today we'll also have the UK-India FTA agreement, which will be signed today. 2:45 p.m. That is what the reports have been indicating is the time of the deal signing for UK FTA agreement. But yes, as I reckon, the stock-specific action will continue. Earnings reaction will continue. We saw Infosys reporting strong first quarterly results. The first large-cap IT company that reported a beat on its numbers. So we'll watch out how the Nifty IT pack also behaves in today's trading session. Apart from that, we also had fairly in-line numbers from Tata Consumer. So we'll watch and discuss all of these stocks in today's trading session, and we'll take up your stock related queries as well. So keep posting them on our live feed. Now, before we delve deeper into the show, let's take a quick check of the top headlines this hour. Stocks on Wall Street end higher on the back of trade deal optimism. The Dow Jones surges more than 500 points, while the S&P 500 and NASDAQ close at fresh records. Asian markets mirror Wall Street's moves amid latest trade developments between Japan and US, as well as positive signs of a deal with the EU and US. Meanwhile, the GIFT Nifty is indicating a higher start for the Indian markets. Crude oil prices hold steady as trade talks take the front seat. Brent crude at $68 per barrel, while gold prices extend losses and EU and US plan to close in on 15% tariff deal. Prime Minister Narendra Modi has arrived in the UK for the signing of the free trade agreement that will take place later today. According to reports, under the agreement, India plans to cut tariffs for UK goods to an average of 3% from 15% earlier. And in key earnings, Infosys reported good numbers for the first quarter to beat estimates, while margins came in line. Tata Consumer also reported largely in-line numbers, while Pharma major Dr. Reddy's reported a mixed set of numbers in the first quarter. All right, if you look at yesterday's trading session, the bull support came in quite strongly for the Indian markets, because we did see Nifty ending with about 160 points gain above that 25,200 mark. This also marks the highest close that the Nifty has seen since July 10 of this month itself, and the buying in the private lenders provided the much needed boost that the markets were needing. But yes, once again, the private lenders, HDFC Bank and ICICI Bank, hitting record highs yesterday, and nearly 40 Nifty constituents ended in the green. However, not much support came in from the broader end of the markets. Mid-cap and small-cap indices both continue to underperform benchmark indices. So yes, all in all, that was the setup of yesterday's market that we need to watch out. But yes, some of the cues that we need to watch out today. Some news coming in from the global front. US jobless claims that we'll be watching out tonight. ECB rate decision also we will be watching today as well. But yes, the stock-specific action and the earnings reaction continue. Some of the Q1 results which is scheduled for today, that includes the likes of Bajaj Finance, SBI Life and Nestle India, which will be coming out with its quarterly performance. But yes, coming to the fund flows data, once again the FI is standing as net sellers. So far this month also they have stood as net sellers, and yesterday also they sold stocks which was worth about 2400 crore rupees in the cash markets. However, some of this FI selling was offset by the DII buying because they bought stocks which was worth about 3,000 crore rupees in the cash markets. But yes, that is coming in from the flows perspective. Option Q's data suggesting a good start. Nifty put call ratio jumping to about 1.14 levels from 0.84 levels. And coming to the F&O ban list, some of the stocks that continue to be a part of the ban, that includes the likes of IEX and RBL Bank. So yes, that is what the trade setup looks like for today's trading session. We're hoping for a good start, and even the pre-open rates are reflecting the same optimism. If we look at the Sensex up about 62 points, just flat in the green. However, Nifty is also above that 25,200 levels. But yes, it's the expiry day, so some volatile swings could be on the anvil. But on that note, let's quickly get on board with a technical expert of the show. Joining me is Chandan Taparia, Senior Vice President, Head Derivatives and Technical Research of Motilal Oswal. Chandan, finally we saw that Nifty reclaiming the 25,200 levels. But do you believe this is sustainable?
Good morning, Lovisha. Thanks for having me. So yes, after decline to 24,882, market managed to hold the lower zone, and we are now back to a key level of 25,250 marks. Earlier, with this hurdle in the last week, market drifted to lower levels, and now a decisive hold above the same could trigger the short covering move in the market. The good part is that Bank Nifty is all set to engulf the decline of last 3 weeks, indicating the lower top, lower bottom on the weekly chart. As per the historical data, usually July remains positive, but as of now, we are slightly down by around 1%. So I believe the 200, 300 points really cannot be rolled out over the next 5 days, given the market structure. So I believe with support of 24,000, index can reclaim to 25,350 to 25,500 marks. So expecting some bullish resistance and surpassing the immediate hurdle to come in some short covering or next leg of rally in the market going forward.
Okay. Chandan, what about the Bank Nifty index? Because the support is coming in from the index heavyweights, HDFC Bank, ICICI Bank continue to do well. What are the levels that you're watching out for there?
So recently, the Bank Nifty managed to hold support near 56,250 and turned higher. However, multiple hurdles are clearly visible near 57,350 marks from last almost 15 days. But I believe today's positive opening and follow-up action could surpass that level. And in that scenario, the Bank Nifty can head towards the new lifetime high of 57,628. Positional, we have target of 58,000 to 58,500. And we believe post this expiry, momentum could be there in the Bank Nifty to the new lifetime high. So I believe after the opening with support of 57,000, one can look for an upside target towards 57,500 to 57,628. And after that, next leg of rally cannot be ruled out in the Bank Nifty index.
57,628, that is what the level that we need to watch out for Bank Nifty index. But yes, one of the index supporters, that is your Nifty IT index. Yesterday it was flat in the green in yesterday's trading session. But yes, Chandan, how are you watching out for the Nifty IT index now that Infosys has also performed better than its other large cap peers, and even we saw good numbers coming in from Persistent Systems?
So Nifty IT is comparatively underperforming. In fact, from last 15 days, it has been making lower top, lower bottom. So I'm not expecting major recovery in most of the IT name, but however, Persistent, which witnessed recovery, failed to hold. So expecting it to go down towards 5,400. So I believe positive in most of the market, but IT could be dull and upside could be kept in the sector.
Upside can be capped for the sector. We are expecting a good move coming in from Infosys today because brokerages have been largely positive on the counter following its quarterly results as well. Let's also talk about Nifty Realty Index because that was one of the worst sectoral laggards yesterday. Chandan, can we expect a further fall in the Nifty Realty Index, or what are you watching out for?
So like Nifty real estate counter, I've seen recovery, and selective real estate counter witness some buying interest. If I talk about the realty index, it witnessed decline in last two trading session, but before that some buying interest was happening. So we have to be very selective in the sector. Counter like DLF can see some buying support at lower zone, which has been consolidating in a range. So with support of 820, it can head towards 870 kind of level. So one has to be very selective because the entire sector is diverse. Few are finding selling pressure while few are witnessing recovery. So for an example, Loda looks weak. It has given a breakdown while DLF has been consolidating. So selective approach has to be applied in real estate counter.
Selective approach need to be applied for the realty index. But yes, once again, not much support coming in from the mid cap and small cap space. Chandan, anything that you're watching out for the mid and from the broader end of the markets at least?
Yeah, so one trade that is KEI looks good. Supports are inching upwards. However, momentum is missing from last 2 3 days. But till it holds above 3880, it can head towards 4200 level. Because is one counter from mid cap space which has given a consolidation breakout on the weekly and the daily chart. It has given a decisive hold above 775. So with support of 775, it can head towards 825, 830 kind of levels. So I think these are the name which could be in focus. But we have seen the broader buying in selective heavyweights counter when market recovered from the lower levels, including metal, minings, few financial name. LTF, L&T Finance could be in actions. Supports are gradually shifting higher. With support of 206, it can head towards 225 kind of level. So these are the couple of names which needs to keep in mind for mid cap, small cap play.
Okay, that is a view coming in for the broader end of the markets. But yes, let's address one stock in focus, that is your Infosys. Like we were talking about the Nifty IT index, but let's take on an individual level, because yesterday the company did come out with its first quarterly performance, where the consolidated net profit is up about 9% on a Y-on-Y basis, and revenue also climbed by about 7.5%. The management raised the lower end of the revenue growth guidance, while it maintained the margin guidance between your 20 to 22%. Now, this is the only large cap IT that has seen a positive revenue in constant currency terms versus peers. How the brokerages have reacted, they are quite positive on the counter. If you look at Nomura, they have given out a buy call on the counter, and they expect about, they believe that the Q1 FY26 was quite a beat, and the Project Maximus impact continues to play out well on the margins. On the other hand, Morgan Stanley also gave out an overweight call, and they believe that they expect that the revenue growth toward the top end of FY26 guidance range is quite a positive on the counter. Even CLSA gave out an outperform call, because they believe that the Q1 has ticked all the right boxes, and the FY26 revenue growth guidance has been in line with their expectations. But yes, the stock is down so far this year, down about 16%. Chandan, what are we expecting on the counter? Can we expect some relief at least in today's trading session?
So, like Infosys has got stuck in a range. Uh, in last 3 weeks, the counter has seen a corrective move from 1650 to 1550. But now support based buying could emerge. So with support of 1535, I believe it can head towards 1600 to 1620 kind of level. So some mild recovery could be there in the counter with some positive to range bound distance.
Okay. Let's also address another IT company, that was your Persistent Systems, because they also came out with its first quarter performance, where revenue grew about 3% on a sequential basis, and profit was up about 7.4% on a sequential basis. Margins were stable at 15.5%, and EBIT was up about 2.5%. However, the stock is down past 1 month. Chandan, what can we expect next on the charts? Because the brokerages have been quite okay with the counter so far.
So I believe upside is likely to be kept. So I need to look at the key support to hold. As of now, I believe 5450 could be the key levels for the counter.
Okay, that is the view coming in for Persistent Systems. Just a second before the first rates will come up on your screen, we have opened in the positive territory, flat with a positive bias, but holding above that 25,200 mark that is coming in for the Nifty. And Sensex is open also with mild set of gains. So yes, both of them are very flattish in the trade. That is the first rates coming in. We'll watch out for as the rates settle throughout the day. But yes, if you look at the broader end of the markets, they've opened in the red. So once again, not much excitement like we were talking about. The broader end of the markets could see some sideways trade going ahead. It's the Nifty weekly expiry also, so the volatility could be on the higher end. But yes, flattish start for the markets, but with a positive bias. So that is one thing that we are holding on to. Infosys, we'll watch out how the counter has been doing, given that that was where we have been watching out. The much support will be coming in for the markets, but that is opened in the red with about 0.3% cut for Infosys at this point of time. Let's take a look at how other sectors are doing at this point. If we take a look at Nifty IT index, it is opened with about 0.5% cut. Like Chandan was talking about, the upside could be capped from here on. So we can see a little bit of a profit booking on the counter as well. On the other hand, if you look at the Nifty Bank Index, it is opened with a negative bias. And Nifty Auto Index continues to do well with about 0.3% gain. On the other hand, Nifty Metals also continue to do well, a 0.3% gain coming in there. Pharma and PSU banks hold up in this volatile market. Now let's take a look at some of the others gainers and movers. Mid-cap and small-cap indices, like I was talking about, they've opened in the red, and even the markets have slipped into the negative territory. Nifty is still holding above the 25,200, but very flattish in trade right now. So very quiet start for the markets compared to how the global markets fared today. We are off to a very weak start in comparison. On the other hand, let's take a look at some of the top gainers and losers on the Nifty 50 from the large caps pack. Tata Consumer Products doing well on the back of its inline set of June quarter results, up about 3.6%. So yes, Tata Consumer Products doing well. Dr. Reddy's Lab also doing well on the back of its stable Q1 results, mixed Q1 results that came in from the pharma giant, and the stock is doing well with about 2% gains. Tata Motors, HUL also seem to be doing well with about 1% gains. Tata Steel and JSW Steel, some of the metal stocks doing well in the trading session with about half a percent gains. On the other hand, if you look on the way down, Hero MotoCorp seeing a cut of about 1%. Kotak Mahindra Bank, the company will be delivering its results on Saturday itself. So a little bit of a loss ahead of its Q1 results. Trent, Reliance Industries continue to struggle with about 0.5% cut. Bajaj Finance, today the company is scheduled to report its first quarter performance. We're expecting a double-digit NII and net profit growth, but it's struggling ahead of its Q1 results at this point of time. Bajaj Finance seeing a cut of about 0.5% or so. But yes, Dr. Reddy's Lab, one of the top Nifty gainers. We did see that the company report its net profit, which grew about 2% on a Y-on-Y basis. However, the profit was down on a sequential basis, and the similar was there from the top line front, which rose about 11% on a Y-o-Y, but flows flat on a sequential basis. So far this year, however, the stock has been an underperformer. Chandan, what can we expect for Dr. Reddy's? The stock is doing well, but so far this year, the stock has been trending downwards. Can we expect any reversal on the horizon?
Yeah, so I believe the short-term bottom has been placed in the counter with level of 1230. It has negated its lower top, lower bottom on the daily and the weekly chart, holding well above its 50-day exponential moving average. So I believe some recovery could be seen in the counter with support of 1245. This time it can head towards 1320 kind of levels.
Okay, all right. Let's also talk about Tata Consumer Products, because that has also been soaring in the trade. 3.6% gains, that is where it is coming in at this point. We did see that the company report its profit, which rose about 15% on a Y-on-Y basis, and revenue also grew by about in double digits on a Y-on-Y basis. If you look at some of the brokerage reactions, Nomura has given out a buy call on the counter as they believe that the company is confident of double-digit sales growth and they should see a sharp margin recovery in the second half. Do note that in this quarter, the company did see over 200 basis points of a margin contraction. So margins is something that where their company has been suffering. On the other hand, Morgan Stanley has also given out an overweight call, and they believe that the EBITDA margin is expected to improve on a sequential basis. But yes, the stock has been quite range bound past couple of months. Today the stock, however, has been doing well. Chandan, anything that on the counter?
Yeah, so I think selective buying interest could emerge in the stock. As of now, it got stuck in a range. Support-based buying is clearly visible, but absence of momentum is missing in the counter. So I think wait for some more swings and then it may stuck in a broader range for next couple of days.
Okay, it might be stuck in a broader range for the next couple of days. All right, that is the stock we need to watch out for. Let's also take some of the viewer queries that has been dropping on our live feed. The first query coming in from Satya is asking the view. He's asking the view on Coal India, since it has been a loss-making counter as he has been holding for the past 1 year. So far this year also the stock hasn't moved. Chandan, anything on Coal India? Any prospective optimism that you're watching out?
It made bottom near 380, which could act as a key support, and slow and steady it can head towards 400, 405.
Okay, all right. The same he's asking for HCC and DJSW Energy as well. How do these both of these stocks stack up on the charts?
HCC has been making lower top, lower bottom on the weekly chart, has seen a corrective move from 37 to 28. So as of now, not getting any sign of pause in selling pressure, but somehow now the pace of selling is getting lesser. So it may find support near 26 marks to get some sort of recovery. Looking at JSW Energy, here looks for a fresh leg of rally or breakout. It has been consolidating from last 10 trading session. A small follow-up could lead the counter to next rally. I believe one should participate here. With support of 525, JSW Energy can head towards 555, 562 levels.
Okay, 550 to 560 levels for JSW Energy that we need to watch out for. Let's take another viewer query on that note. Naveen has been asking the view on Natco Pharma. Natco Pharma past 1 month has been doing quite well, and yesterday also we saw some reports from CNBC Awas where the company is expected to acquire a South African firm. Chandan, anything that you're watching on the out on the charts, because the uptrend is quite visible from the past 1 month?
Yeah, so uptrend is intact, but the concern is follow-up is missing. We have seen decent recovery from 725 to 1060, but today, even after the positive opening, it failed to hold the opening zone. So there is a concern. I believe 985 could act as a key support to get the support-based buying interest in the counter.
Okay, all right. That is a view coming in for Natco Pharma as well. Let's take a look at another viewer query then. Alex has been asking the view on PNB Housing after its Q1 results. So we did see a good set of June quarter performance, but past 1 month the stock has started to consolidate after a good run-up that we saw so far this year. 15% uptick coming in for PNB Housing. Anything that we need to watch out for, Chandan, for PNB Housing?
So structure is slightly negative, making lower top, lower bottom on the daily chart, given a decisive hold below 50-day exponential moving average. So with hurdle of 1075, I believe PNB can decline to as 1010.
1010, that is the view coming in for PNB Housing as well. Let's also address another viewer query. Jomi has been asking the view on Tata Motors. He's asking whether or not we should buy and what is the target price at this point of time. Well, the Tata Motors stock has been doing well in today's trading session. Since yesterday, we've been seeing a pickup in the auto stocks as well on the back of the trade deal that has been signed with Japan and US. So yes, today also the stock has been doing well, extending its run up to the second consecutive day, 4% in just 2 days itself. For 700, that is where the level is at for Tata Motors. But yes, Chandan, what is your view on the counter? Because I know that you've been quite underweight and cautious on Tata Motors.
Yeah, so I'm excited to comment on the same because the stock has given a consolidation breakout on daily chart after the long consolidation of 28 days. Earlier, we used to see the sustained call writing at 700, and now the put writing is even visible at 700 strike. So data setup is quite changing now. Earlier, I was having the mixed bias or slight cautious or avoid distance, but now the way it has given a hold of 670 and given a breakout above 700, I believe momentum could be there. So as of now, with support of 688, Tata Motors now has potential to head towards 723 and 740. So expecting positive momentum in Nifty Auto, and Tata Motors could lead this movement apart from buying interest in other name like M&M and all. So I think yes, Tata Motors, one should look for some buying interest from current level.
Some buying interest could emerge for Tata Motors. 720 levels, that is what we need to watch out for, as Chandan is talking about. All right, let's take another viewer query on that note. Debuk has been asking the view on LT Foods. LT Foods, the stock has been doing well in the past 1 month itself. And so far this year also, the stock has given out good returns. But past 1 month has been quite stellar. Chandan, anything on that you're watching out for LT Foods?
Yeah, so I'm positive on this counter. Even I was expecting a hold above 500 to start the next leg of rally, but got stuck in this week, corrected by around 3 to 4% from higher levels. But trend is intact to positive. I believe till it holds above 475, it is again potential to rally towards 505 to 520 levels.
500 to 520 levels for LT Foods. Let's take another viewer query. Gurpreet has been asking the view on SBI. The stock has been quite range bound past 1 month. But yes, Chandan, how does the stock look like? Because the heavyweights in comparison like HDFC and ICICI has been doing quite well.
Yeah, so yes, HDFC and ICICI Bank. But I want to mention about one name here, which I want to recommend. I discuss about one counter. The name is Bikaji. The stock has given a major consolidation breakout on daily and the weekly chart. In fact, after 30 weeks, it has surpassed above 800 marks. And you ask about LT Food. So as focusing on consumption and eating, so I think Bikaji could be on focus. So one should look at that. But now to reply on your question on the banks, I believe Bank Nifty should outperform. However, for the day it got stuck in a range, but till it holds above 56,750, it can see some buying interest. Looking at State Bank of India, yesterday we have seen decent recovery from lower levels, but towards the end again it got stuck in a range. But trend is turning upwards. With support of 810, we can see an up move towards 813 SBI. Looking at HDFC Bank, I believe a positive to range bound bias could be there till it holds about 1985. Slow and steady, it can head towards 2050, 2060 levels.
Okay, 2000 to 2050 levels. That is the view coming in for SBI. Let's take a look at another viewer query that is dropping on our screen. Kartikesh Singh is asking the view on Arvind Fashions. He's asking, it is in a consolidation mode from a long time, and he's asking whether it can head towards an uptrend. If you look at from the July low levels, however, the stock has been doing well, up about 8.4%. Some pickup has been seen. Chandan, what are you watching out for Arvind Fashions going ahead?
So, Arvind Fashion has seen the recovery from the lower levels. However, in last 4 to 5 months, slow and steady, it headed towards 320 to 500 plus marks. In last 2 3 days, it has been consolidating, but major trend is positive. As of now, till it holds above 484, bullish bias could be there, or I can go for buy on decline stance for an upside move towards 520 kind of levels.
Okay, all right. Let's take two queries in conjunction right now because both of them talk about IT stocks. Manish has been asking the view on TCS. He's been sitting at about 10% loss. He's asking whether he should hold, average or sell. And we also have Baiju. He's been asking the new entry possible now or to wait for HCL Tech. Anything on both of these counters? Of course, both of them have been underperformers so far this year. But what would you recommend at this point of time?
So as of now, I'll avoid IT because most of these stocks are making lower top, lower bottom, and we have noticed that every small bounce is being sold. So when the sector and stock is not performing, better to wait and watch for stability. So I think let's wait and watch for further bargain decline in the counter before we jump and buy.
Okay, all right. Some bargain buying could be watched out. But yes, let's move on to another viewer query. That is, your Kanchan has been asking the view on ITC hotels. She's asking whether or not she can enter at the current level. The stock has been seeing good momentum from the past 1 week. Chandan, anything that you're watching out? Is this a good level to enter ITC hotels?
Yeah, thanks, Kanchan. In fact, I'm positive on the two name like ITC hotels and delivery from last couple of days. I recommended many times. Delivery has been moving upwards, rallied well by 15-20%. Positive on most of the hotels name. ITC hotel recommended from 200 marks, rallied well to 260. But in last 3 days, consolidation or correction was seen. I believe now this consolidation is getting over. So with support of 239, I believe ITC hotel can again rally towards 260, and above that the positional target will be around 285 300.
285, 300. That's quite a positive statement coming in from you, Chandan. Let's take another viewer query on that note. Dipankar is asking the view on Paradip Phosphates. Paradip Phosphates, one of the stellar runaway in the charts from a YTD perspective, 70% returns. Chandan, what are you watching out for? Can we expect an extension of the same?
Yeah. So the strong momentum was seen in the counter. I believe further momentum could continue. So one can keep the support near 193 in Paradip for an upside target towards 210, 220.
200 to 20. Let's talk about one of the index heavyweights because Bajaj Finance, because it is expected to report its first quarter results today. According to Money Control poll estimates, NII is expected to grow in double digits by about 27% on a Y-on-Y basis, and profit is also expected to rise about 19% on a Y-on-Y basis. Margins, however, that is expected to contract by about 22 basis points. If you look at past 1 month, Bajaj Finance has been in a consolidation zone. Chandan, what are we expecting? Can we expect this trend to continue for some more time?
So Bajaj Finance got stuck in a range. However, we have seen a strong momentum on the last day, but follow-up is missing. But yes, bias could remain positive. Declines could be both. With support of 943, we are expecting the counter to head towards 1000.
Okay, we can expect to head towards 1000 at this point of time for Bajaj Finance. Let's take another viewer query on that note. We have a viewer who is asking about Epigrill. On how the stock looks like on the charts at this point of time. The stock has been doing well, 0.5% gains coming in there. But if you look at from the past 1 month, stock is up about 3% or so. But yes, Y2D, we can see the stock has been an underperformer. Any levels that you're watching out for Epigrill, Chandan?
So I think we are not closely tracking this counter. Some sort of consolidative move could be seen in the name. However, support-based buying is intact, but only the concern is about the follow-up activity. So require some decisive setup in the stock to get any clarity for the recommendations as of now.
Okay, all right. All right, just one last question before we let you go, Chandan. What are your top picks at this hour? We're in the thick of the earnings season right now, but anything that you're finding interesting, apart from Bikaji Foods, like you mentioned?
Yeah, thanks. You mentioned that. Otherwise, I would have recommended the same. But yes, I believe it's going to be very stock specific because every day sectors and the counters are changing their stance. Uh, we have seen a positive stance in counter like Tata Motors. However, we discussed earlier. But yes, here I can comment again. So Tata Motors one can buy with support of 690. Look for an upside target towards 723. Second idea could be buy on the Biocon, positive on the selective pharma, and Biocon seems for a next leg of major breakout on the daily weekly chart. In fact, this is going to be multiple year breakout of last 4 years. So any decisive hold above 400 could trigger the next leg of rally. And the stock has seen a consolidative move of last 6 days. So with support of 390, one can look for a 420 kind of rally in Biocon. So Tata Motors, Biocon could be 2, 3 preferred name in this market scenario.
Tata Motors and Biocon, those are the stocks that we need to watch out for. But with that, we have to let you go, Chandan. But thank you so much for your time and joining us.
Thank you.
All right, let's take a quick check of the markets. We did start off in the green, flat in the green, but we have dropped to the red. Sensex down about 170 points, and Nifty has also slipped below that 25,200 mark. So while we were hoping that the sustainability of 25,200 will be watched out, we've slipped below that at this point of time. But yes, if you look at the broad end of the markets, both of them have been quite depressed. Mid cap and small cap, both of them have been seeing some losses at this time. Bank Nifty has also turned into red with about 0.2% cut. Nifty IT index with about 1% cut too. On the other hand, if you look at Nifty Realty Index, yesterday one of the top sectoral laggards, and today also it's not doing well with about 0.3% cut. On the other hand, what is helping support the markets is your autos. Autos are doing well, 0.3% gain coming in from the Nifty Auto Index. FMCG also seems to be holding up well, and metal stocks also seem to be holding well at this time, and Pharma Index definitely soaring on the back of Dr. Reddy's June quarter performance. So yes, all in all, we are at a subdued front at this time, and we'll watch out if if the second half actually provides any succor for the markets. But yes, all right, on that note, let's quickly move on to our next guest of the show. We have market veteran Ambareesh Baliga joining us right now. Baliga sir, good morning. Let me start off with the trade deal. No signs of the Indian trade deal yet, but what is the rate that the market has been pricing right now?
No, I think that's what is bothering the markets. And I think the other thing which is bothering the markets is the possible tariff on Russian oil, because that's going to affect, the largest cap company, Reliance. So I think to a certain extent, people are taking a cautious view at that point of time. But looking at the sort of liquidity which is there in the market, we are also not slipping, below a certain level, and that level is about 24,800. So basically, we would be in that sort of a band between 24,800 and 25,400, 25,500. Unless there is something, some clarity on the trade deal, I don't really see the markets really going beyond that immediately. And in case it moves beyond that, then I suppose I think the next level would be closer to the all-time highs which we had seen late last year.
Okay. Baliga sir, so far this month, FIs have once again been net sellers of the Indian markets. But if you look at the dollar index, that has depreciated 10% this year, and even inflation looks under control for India. So when the macro setup is doing well, what is keeping them away from the Indian markets?
No, I think clearly the performance, I would say the earnings. If you look at the earnings, this quarter earnings, haven't really been too positive. I would say it's more mixed, more towards more of disappointments than like positive sentiments coming from the earnings. So as of now, I think FIs will continue possibly booking out. But then if you're talking of long term, I don't think they can ignore a market like India, because whatever said and done, we would be, I think, one of the only bright spots globally if you're talking of the next at least 3 or 4 years. Because when you're talking of gloom and doom across, especially Europe and US, I think the Indian markets would be the ones, and the Indian economy would be the one which would be performing So finally, they'll have to come back. So possibly once we see the rupee like again stabilizing, because we had seen an appreciation to levels of about closer to 84, and again now we have depreciated to about 86 plus. So once we have rupee stabilizing somewhere, I think that's the time they'll come back.
Okay, rupee stabilization is something we need to watch out for. But Baliga, so what about the valuations? How are we on the valuations front, and given the slew of earnings that we have seen so far?
I mean, looking at the earnings, yes, I mean, we are, I would say a tad bit expensive. In case we move towards that 26,000 plus levels, we would again become a bit expensive. But then I would say that don't look at the market overall. I think there are opportunities in pockets. I mean, there are sectors and there are specific stocks which could be looked at. Because I don't think we will see sort of a secular, move what we have seen in the last 3 to 4 years, at least for the next 6 to 8 months. I think if you're talking of the markets really moving up, I think that should be sometime in 2026. But calendar 2025, I think would be more or less range bound, maybe a broader range than what I had given earlier, but it would be more or less range bound.
Like Bhaiya, so you mentioned that earnings growth has been also faltering at this point of time. Everyone has been squandering for value as well in this market. But where is that area that you're finding comfort at present?
See, I mean, value-wise, there are a couple of pockets where I'm finding comfort. I mean, one is the specialty chemical space where I clearly see, I mean, a huge exponential growth over the next 3 to 4 years. Some of the old economy sectors, such as cement, I think that's one which should start firing because, I mean, till now we have seen volume growth happening in the last couple of years, but we have not seen the margins improving. I think we should start seeing that happening over the next 4 to 6 quarters. Steel, I think, is the other sector which I think should do well, at least in the foreseeable future, the next 3 to 4 quarters. And in that, I think one should look at the top steel companies.
Okay, okay. And what about the new age companies? We did see Eternal Paytm coming out with its June quarter performance, and there was some positive management commentary as well. Do
Right.
you see a quick commerce play to be the next market disruptors, or how are you watching out for?
Well, see, they've already been disruptors. I mean, something like Eternal has been a disruptor, and with the sort of performance which they come out with, I mean, if you look at their bread and butter business, which is food delivery, that continues to do well. Yes, I think the growth could have been better. Uh, I mean, the losses were basically because of the sort of investments which they made in Blinkit. But again, look at the sort of a growth which they have shown in that space. I mean, clearly they would be, I mean, they would continue to be number one by far. And it's only a question of when the margins start kicking in. And I think that should happen over the next 2 to 3 quarters. And if you look at the other properties of theirs, I mean, that could take a while longer. But then if you're talking of the next 2 to 3 years, even those properties will start, I mean, showing decent profits. So here again, we are talking of a huge growth. So even at the current levels, yes, I mean, if you don't have, one should pick it up. But if one has bought earlier, then maybe wait for a market correction to buy into the stock because this is a stock for the next at least foreseeable 4 to 5 years. If you're talking of Paytm, I think I would wait for possibly for a while longer because the stock has done extremely well. I mean, at least the stock performance has been extremely well in the last 4 or 5 months. And the main thing I would look at is, I mean, the consistency. I mean, that's what has been lacking as far as Paytm is concerned. No doubt, I mean, the earnings were good. But then if they continue to perform like this over the next 2 quarters, yes, I may have to buy it slightly more expensive, but then I'll know that, I mean, at least the consistency is there and it should move higher.
Okay, okay. What about, Baliga sir, about the traditional consumption basket? Because right now the street has been pricing in at least the single digit volume growth. Now, do you believe that
Right.
most of the positives and the recovery narrative has already been priced and bought by the markets?
No, I would say most of the negatives have been priced in. And in fact, I was expecting a better sort of a volume growth, which unfortunately has not happened. So I think it can happen over the next 2 quarters because, first of all, I mean, the sort of tax benefits which the middle class has got in the last budget, I think that should play out. I mean, we've had good monsoons. I think that's the other thing which should play out over the next 1 quarter at least. And I think the eighth pay commission is the next big trigger for the consumption space. So I think the worst is priced in. Don't see much of a correction from here as far as this space is concerned, both FMCG as well as consumer durables. But then possibly the move up, we may have to wait for a quarter or two more.
Okay, okay. Let's also talk about the banking space because so far the both of the private lenders have guided for range-bound margins going ahead. So, do you believe
Right.
that this is the time when PSU banking pack could lead the front against the private lenders going ahead, or what is your favorite amongst them?
No, that could be for a while. But then, if you're talking of banking overall, I'm decently positive on the banking space, both the PSU large caps as well as the private large caps, and some pockets in the private sector and public sectors small caps. I mean, just to name a few of them, in the it's clearly not a small cap, but the slightly smaller banks, which is IDFC First and Bank of Maharashtra. I mean, private sector and the PSU. If you're talking of the next possibly 3 to 4 quarters, clearly I see another 50 basis points cut by RBI. For the balance of calendar year 25. And along with the earlier cut of 50 basis points, I think this should actually help in the credit growth going ahead. And that's what I think should play out for the banking space overall. Whereas if you're talking of the NBFCs and some of those banks where they have a larger exposure to retail, I think that's where that's the pocket I think there could be issues going ahead. Delinquencies could increase, and that would be more on the NBFC side.
Okay, okay. What about the life insurance players, Baliga sir? Because HDFC Life, SBI Life, so far this year they have seen good momentum, but LIC in comparison
Right.
has been quite subdued in trade. How do you expect this FY26 to pan out? HDFC Life has decently posted numbers, however, for June quarter.
Absolutely, absolutely. I think, if you're talking about the life insurance space, it is still underpenetrated comparatively. And I think there's a decent amount of, upside as far as the penetration is concerned. And among them, I think LIC should be the largest beneficiary. But at the same time, the leading, private sector players like HDFC Life, should do well. So any correction in this space is what I would utilize to buy.
Okay, okay. Let's also talk about IT space right now because we did see Infosys coming out with its June quarter performance,
Right.
and the management has also raised the lower end of the revenue growth guidance. So, how are you positioned on the large cap IT players and against that about the mid caps too?
No, IT overall, I would be a bit cautious at this point of time. I mean, if you had asked me about 3 months back, I was hoping for some green shoots to come in this quarter. Unfortunately, that's not. I mean, although Infosys management commentary has been slightly more positive than the rest of the large caps which have already come out. But overall, IT space, I would still wait for a quarter or two more. I mean, let there be more clarity on which way US is going because we need to be very clear on the sort of a pipeline of order flows which will be there. Whether the margins can take a further dip from here or not. I think these are the issues which are there as far as the IT space is concerned.
Okay, okay. Anything else that you're cautious on now that you mentioned that IT is something that you would be a little cautious about?
The other sector which I'm cautious on has been, a performer in the last at least one quarter to about 4 5 months is the defense and the railway space. I think the best is already priced in. And the move was more sentimental than fundamental because, even as of now, no one is really talking about the execution risks which most of these companies carry. The sort of order flows which have been there were excellent, but that's already priced in. I mean, most of them have become multi-baggers. So that's already priced in. What is not priced in is the execution risk. And that is real because most of them are not able to expand capacities, as per the orders which they have received. So you really can't keep on delaying the deliveries.
Yes, yes, that's right. And given the run up that we have seen in defense stocks, that is something that everyone is a little cautious about as well, execution risk. But
Right.
yes, with that, we have to let you go, Baliga sir. But thank you so much for your time, and we hope that we connect with you
My
soon.
pleasure. Thank you.
All right. Right, let's take a quick check of the markets because we did slip in the negative territory. If you look at the Sensex and the Nifty levels, both of them are quite subdued at this point of time. Nifty has also slipped below that 25,200 mark. Of course, do remember that we did start off above that 25,200, but then once again we have slipped below that 25,200 mark as well. Some of the sectors that has been contributing to the loss, that includes the likes of banking index, IT index. Every market expert that we have talked about so far has been cautious on IT index, despite Infosys reporting a decent performance in comparison to its large cap peers. On the other hand, Nifty Realty, Nifty PSU banks, Pharma, however, is doing well. And of course, if you look at the media index, also is quite subdued in the trade. Mid cap and small caps continue to sulk. And Pharma index, however, is something where the investors are finding comfort at this point of time. But yes, with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing, and we will be discussing about how the market is developed and what the stocks were in focus. Until then, signing off.